Our next session is an equally interesting topic that we have, which is on realty growth with sales and marketing, redesigning strategies for 2021, or should we say 2022 now. So let me introduce our panel. Our session moderator is Mr. Sunil Mishra, Chief Strategy, Anurag Group, and CEO, Trespect. Trespect is Anurag's pan-India B2C open market residential broking business, and Sunil Mishra has 25 years of experience in building businesses across real estate, telecom industry, BFSI, and online startups. His experience spans various fields like sales and marketing, private equity management, consulting, and business analysis. So this was our moderator of the session. Let me introduce our speakers in an alphabetical order. I welcome Mr. Kunal Sheda, COO, the Wadhwa Group. In his present role, Kunal Sheda is responsible for driving profitability of mid-income residential projects in Mumbai. In the past, he has worked as a member of the investment banking team at Citibank. He was part of the investment team at Urban Infrastructure Venture Capital, which was one of the largest real estate PE funds with investments in over 60 projects across India, and managed sales and liaison team at Omkar Realtors, and was also involved in project management and corporate affair function at the Wadhwa Group. He also devotes a lot of time in advocating on behalf of real estate developers associations for getting favorable regulatory policies notified from the central authorities like Ministry of Civil Aviation and Ministry of Environment. Our next panel member, let me introduce Mr. Prashin Jovalia, Vice President Marketing Strategy, House of Hiranandani. A marketing professional for over 15 years, Prashin has gathered extensive experience in the advertising and marketing sector. He has gathered extensive experience while working with some of India's leading brands such as Ogilvy and Mather and Godrej Properties. Prashin has not restricted himself to any one particular domain, but has a diversified exposure in the field, crafting some of the excellent consumer-driven marketing strategies. Our next panel member, let me introduce Rajiv Dash, Head Sales and Marketing, SD Corp Shapoorji Group. A marketing and sales professional with FMCG and consumer research background, Rajiv Dash has been involved in building brands through innovative marketing and sales approaches. He was previously with Tata Housing for more than 11 years, with AC Nielsen handling the FMCG brand and UB Group. His ambition is to create brands through innovations with better consumer understanding. Our next panel member is Mr. Sudarshan Lodha, co-founder Strata. Strata is a tech-enabled fractional real estate investment platform, and Sudarshan Lodha leads the company's strategic roadmap and envisions offering commercial real estate as an investment class accessible to everyone. Sudarshan, with over a decade of experience, was closely involved in several PE and VC transactions, representing over 1.4 billion in investments. Our next very eminent panel member, let me introduce Vikram Kotnis, Executive Chairman and MD, Sell.do. Vikram Kotnis has over 18 years of experience in incubating and scaling up successful businesses. Vikram co-founded Sell.do, India's leading sales and marketing CRM for real estate business. It enables real estate companies to automate their entire consumer cycle on a single platform. It has a suite of cloud-based sales and marketing automation products, which helps real estate companies market smarter and sell faster. So this is our expert panel, and let me now hand it over to our moderator of the session, Mr. Sunil Mishra, to take over the proceeding.
Thanks, Apna. Thank you very much for the gracious introduction. I'm happy to be back moderating the session with a very high quality and diverse panel of practitioners of sales and marketing in our gradually strengthening real estate industry. So the topic of this session is realty growth with sales and marketing, redesigning strategy for 2021 and 2022. Now that Sapna has just widened the scope and makes sense. So we'll try to focus on the changes arising from a few trends of the recent past. We'll use the time of the esteemed panelists to share their on-ground experience. And hence, I shall try to just set up the context talking about these few recent trends in real estate sales and marketing. So I'm categorizing these sort of trends in 5 rough buckets so that it's convenient for us to refer to those while talking through our discussion points. So trend number 1 is the long-term trend, which started off with regulatory events. Started off from end of 2016, went on till 2018 end. You know those five factors of demonetization, RERA, GST, the insolvency code, and finally the NBFC crisis, ILNFS, DHFL, India Bulls to some extent. As a consequence, the industry got reshaped. Consolidation of top players started. We are seeing a bunch of blue chip boys sitting around this panel. And obviously, this had a serious impact on sales and marketing. So that's the trend one, which is the regulatory induced trend. Trend two was the increasing trend of home search starting on the internet, marketing spends moving from offline to online, and the changing habits of the millennial customers, which I'm sure you guys must be sort of living through on a daily basis. So it's more on the digitalization and change of consumer behavior. That is the second trend. The third trend is more recent, which is the pandemic, the COVID-related changes that the industry has undergone. And this is, of course, since March 2020. So the shift to digital, the reverse migration of IT employees back to tier 2 cities, the upward migration of home buyers to the 2.5 BHK getting created as a product category, the hit on affordable demand and supply, which was seen post-pandemic. So that's the trend three, the COVID related. So regulatory, digital consumer behavior, and the pandemic related sort of trend. Trend four is the more recent one. The last 3 months, July to September 2021, 62,000 new homes were sold in that quarter across the top 10 cities of India, surpassing the stamp duty induced January to March quarter, which had just happened, about 55,000. So that's a happy trend which we all are sort of going through. And finally, more tactically, the event five, it's not a trend five, which is the advent of festive season. So Ganpati Bappa, Ale Amcha Gari, Dashera and Navratri is coming. November to February is still remaining. So that's the fifth sort of trend which collectively form the context for the discussion for today. So with these five macroeconomic and environmental trends, which may shape the type of real estate sales and marketing, I shall set the ball rolling, get the views of the smarter people on this group, as I call it. We have scribbled down just now a bunch of topics. I shall request 2 to 3 panelists to comment on each stage. So that's the sort of a monologue context that I wanted to set up and allow you guys to do most of the talking as I move into some sort of directed questions to each one of you. Again, as I see across the screens, I mentioned the word diverse. So we have got sort of 3 business leaders from blue chip real estate development companies and 2 very smart sort of players. Vikram, obviously, almost a doyen of digital marketing, and now I see it's a sell.do, which is the CRM piece that you're integrating everything in. And Sudarshan, who's a legal eagle, which I figured out, turned a startup entrepreneur who will talk to us more about commercial and a fractional ownership there. So I'll distribute the topics accordingly, but I'm happy for anyone to sort of just join in any of the topics to add their points here. So without much ado, if you all are okay, I'll jump into 5-6 topics that I just scribbled down. The first one is the pleasant sort of surprise of Q2. So the Q2 numbers have surprises presently, as I just mentioned. So do you think we have called out the bottoming of the market is the point I wanted to talk about. And are we preparing for the proverbial bull run in the next 2 to 3 years? So if I may invite Kunal, Prasheen, Rajiv in alphabetical order to sort of just share their views one after another. Kunal.
Thank you, Sunil, for the gracious introduction and giving a good background to this webinar. So I would like to start off by saying that any decision has 2 parameters, one subjective and another objective. On a subjective basis, let me tell you that the momentum is really good. It's all about in Hindi language we call mahol. The mahol is positive, okay. And on an objective basis, home loan rates are an all-time low. The need for house is much more prevalent now due to COVID. There is very high levels that the share markets have reached. So over the last couple of months, people are pulling out, and therefore we can see visible, degrowth happening in the share markets also. At the same time, high levels of wealth has been created by some of these new age entrepreneurs, who have sailed, who have started with startup companies. So these are some of the objective parameters. Uh, Due to the combination of both the subjective and the objective parameters, we are seeing that the market momentum, the sales are phenomenally good. Uh, I'm sure all the people over here would agree that last 12 months would have been the best sales that we all of us would have seen in our careers. Okay, so that's the present position. You asked about the future also. So let me tell you that the way we look at it is that the structural shift has happened. I mean, each one is here. They want a good house. Okay, whether it's a slum dweller or it's a penthouse owner, each one is wanting to upgrade. Okay, uh, within their reach, within their budget, they all are looking for little bit extra, one room extra, one facility extra, one amenity extra. Now, because that structural shift has already happened and COVID has taught us that we need to spend more time with the family, with ourselves, on ourselves. So therefore, housing market is going to boom like crazy over the next 2 3 years. uh, how each one of us capitalize on it is the key differentiating factor. uh, I know of a developer in Andheri who is only targeting slum dwellers. Okay, today any slum dweller would, if he sells his existing house, would get 30 40 lakhs, and he's targeting those slum dwellers to get into a studio apartment of 130 140 square feet, organized living, more facility driven, more amenity driven. At the same time, lot of agencies also are capitalizing. We have sell.do, we have strata, home capital. Some of these new age companies will be able to benefit from this growth immensely.
Got it. Super, Kunal. So positive environment, structural shift in demand, and hence need for homes. So you see the next 2 3 years possibly being an upward shift. Want to add something to that? Yeah.
So, firstly, thanks, Sunil. Thanks very much for a very nice introduction. And hello to my fellow panelists. Hope everyone's doing well. I think I'm audible, right? Okay. So I genuinely feel I would agree to Kunal to a great extent that over a period of last couple of years, I think last couple of years, the last 6 months have been pleasantly good with respect to sales. I think one of the reasons for the same is that there had not been more launches also in the last couple of years, and that's one of the reason why you have seen this kind of growth with respect to the selling the residential sales. And like you rightly said, yes, there has been a times where over the last 5 6 years, right from demonetization, RERA, GST, and other issues coming in, this was like more of a bottoming out, like in terms of what more could have gone worse with respect to post the pandemic. So I think that has, I would feel that somewhat has set the ball rolling also, and it has given a great amount of opportunity for people who have been staying in homes for a good amount of time to save a lot of money. One of the key reasons that I'm seeing people around have, yes, there have been, over the last 2 years, a lot of things have moved, which has not been in the most acceptable form in terms of salary cuts and other things. But at the same point in time, I think overall, because of less travel, less going out, people have saved a lot of money, and that has also that has made them sufficient enough for them to kind of go out and invest in homes, one. And secondly, also from a standpoint of understanding why homes are so essential. I think the last 2 years have taught people the importance of larger homes, or last 2 years have taught people the importance of having a specific space for them to nurture their families and living a peaceful life. So that has in turn brought in a huge amount of inflow towards residential sales. I also feel that yes, over a period of next few years, like what the overall cost of acquisition has relatively gone down as well, and that has given opportunities for a lot of developers to go ahead and increase their spends with respect to real estate, with respect to digital and other aspects, and that has led innovations also to kind of come in and creep in. So I genuinely feel that yes, the last 6 months have been great. At the same point in time, I think the next quarter seems to be very promising, and feel that there will be good amount of traction as we move forward with respect to real estate sales.
Fantastic points. Fewer launches in the past few years, savings in the family from lockdown because of lesser avenues to spend, importance of larger homes realized, which was similar to the point Kunal made on the structural shift. All this possibly have colluded to give this last 6 months, and you hope and sort of you almost are forecasting that. Ajib, what's your observation been?
Yeah. Hi, Sunil. Hi, Sunil. Can you hear?
Yes, Rajiv, we can hear you.
Yeah. So, Sunil, I think I agree with Prashid and Kunal that there's a positive movement certainly that's there for last 18 months, not only 6 months. If you have to see after the kind of pandemic happened, I think there is a positive movement in real estate. The only aspect that I would like to touch upon is that it could have been better in terms of the numbers. But I think this year we have a kind of shortage of RTMI stock as compared to last year. If that segment, I think that segment is going a bit faster. And if I see the customer coming to the site, there is a lot of demand for RTMI or near position. I think that is something that inventory, though some of the developers, some of the micro markets has, but a lot of consumption has happened last year. So that is one is the speed breaker. Otherwise, this year number could have been much better as compared to last year. That's one segment, RTMI. The second thing is that today, if you see the cost, the developer, the cost of construction, the cost has gone up. I think that is one challenge that the developer has to take care of in terms of pricing. So one has to think that last year the pricing was better for a customer point of view, but this year because of the cost has gone up, whether it's a steel, cement, or the labor cost, so that has to be taken care somehow. Otherwise, your margins are getting challenged. So the cost is one thing. Third thing, which is a good thing for real estate, is that we are getting end users. So that the end user segment is good for a branded players. So if you are a good brand, if you are known in the industry for your project delivery, and you can showcase your projects in a better way, then the branded players are doing very well. Even if you see the market share of the branded A-grade developers are growing up more than 100% in last 12 to 15 months. So that is a good thing for real estate, that we are making it more organized, more branded, and we are commanding more respect as a category. And that will help us in commanding more premium also. So we will not be a commodity, will become a brand. If it is goes for another 2 years, like the phenomena of people with a delivery track record, with a branded player, with a brand name, they're doing well and markets are going up, then it's a good thing for the industry that we are becoming more brand conscious and we'll get a premium for it. So that's a good thing to happen. The last point is that the experience part. Today, during the lockdown, people used to talk about real estate saying that it's all about location, location, location. If you have to compare that with a movie, people used to say entertainment is what holds the movie. It used to be location. But today, I think location is getting added with experience. The experience that you give to the customer, because these are the end users now, mostly end users, not investor, your experience is becoming the differentiator. So that experience, how you create digitally in a virtual platform or the customer coming to the site, you need to differentiate. And that experience, you have to package it in such a way that you are showcasing your product plus experience, then the final output will be the sales or booking. So the differentiator is the experience. Then the last part that you need to think through when it's a customer journey is coming, whether I can get today the referrals and loyalty. I think that is becoming a bigger segment. If I can get a good customer, it may be less number of footfall happening to the site because of the pandemic, but my conversion ratio is critical. So I need to bang on the conversion ratio. get my conversion ratio going up so that my bookings are up, and then push the referral and loyalty. If you have created that experience, then push the referral and loyalty so that you get more sales. So that is the other part that, which in other category, we call it as after sales and service. This is becoming critical to real estate now. So location used to be there, but now that's getting experience through experience, whether it's virtual, digital, or physical at the site, plus loyalty and the referral becoming critical to real estate.
Rajiv, a million insights there again, and I think I seriously need to take you out for that 1 hour session that we had promised each other.
Yeah.
Inside you. So this, of course, comes from being on the ground and understanding consumer insights and being there. So sales could have been better if the more RTMI stock was there. The cost and price point is so important, Rajiv, which you mentioned, because while the price were low for the last 4-5 years, home loan rates had reduced. The Goldilocks confluence that happened may not continue if prices go up because of costs. It's a very big point for marketeers there. The end users, branded players getting more. You always leave back a catch sentence always, which is brand rather than commodity. I think that's my take on this. Has to be. We have to move up the value chain there. And experience, we'll speak about it, and I'll engage other sort of speakers also on that. It's so important, and we really need to move the category up rather than some guy had called me and saying, rupees per square feet dalte ho ads mein. So that's sort of a bit of a pushback on all of us, and you're so true about experience piece. Cool, great. Going is good. Possibly it should carry on. Rajiv has added a few sort of a sweet caveats. It will carry on, but hey, we have to keep on working hard on all those aspects. It's not going to happen by magic or by math care of the future. So changing gears a bit, getting Sudarshan into the discussion and possibly starting off with a bit of an icebreaker, Sudarshan, because you do something which is slightly off the beaten track. So what does Strata Prop do? I think that's the brand possibly you are trying to build. How is it making investments in commercial real estate easier? And then, of course, your experience on the COVID time and online behavior change, if you picked up any in your business here.
Sunil, thank you so much. I hope I'm audible. So at Strata, what we realized, as much as what Rajiv, Kunal, Prashin had just mentioned, right? As much as the market is driving towards an end user market, but at least till 2019 data, I can say, because 2020 data is completely not yet out in clear numbers for that matter. But what I feel was it was a 55-45 market. 55% of the residential market was end use and 45% was investment. And these are data which is from the Reserve Bank of India, right? So you're talking about close to 1.5 lakh crores of money getting parked year on year of the 3 lakh apartment market, which we have year on year, getting parked into residential as an investment. Now, from a return standpoint, it's just meaningless for an investor to invest. That's when we realized that there is a solid appetite for investors to invest in real estate, but something which is high rent yielding, right? The more deeper we went, we realized that it's a very, very large problem, and capital accessibility have been the prima facie reasons why they could never afford a good commercial grade A rent yielding asset for that, right? And why only the big funds can play the games, even the small boys can play the big boys game if joined hand collectively. So that's what the whole idea is. And we started out, we started just 3 months before the pandemic from a business standpoint. The intent was to get accessibility to investors. Second was bring transparency into the system, and more importantly, create a liquidity where one can liquidate their investments as and when they require as well, right? So these were two things. Confidence was more because this is a very proven model in the US. There are companies like Cadre, Realty, Mogul, Fundrise, which in 6 years, 7 years of time span collectively have about $15-20 billion in terms of AUM, doing exactly what we do. So, one thing we realized, and we know very well, in India, gold and real estate, you don't need to sell anybody. You just need to show them how to do it, right? So I think our initial challenge when we started out, obviously, when we started and then the pandemic hit, we were all over because our investors are people who go to such offices. We had to change gear, and people's mindset about investments for commercial is only office. Unfortunately, that is the only access they get. There's a lot of plethora of other asset classes in commercial which is available, but it's very, very institutional led, right? So we changed gears, moved into warehousing, moved into industrial facilities in the pandemic. So clearly we haven't met our investors till date, right? So we manage about 470 odd crores. Entire investment experience is online. Happy to answer all the queries, whatever is required. But then we haven't met, but made the entire experience so seamless for them that we've seen the whole word of mouth, what Rajiv mentioned, scale up so very much for us that from a 0 to 450 crores, we could do that in close to about 15, 16 months from a business standpoint. Now, one thing we, as a great learning which we got is we can sell online, but we cannot buy online, right? So the seller still does not get conviction unless he does not meet you, right? So whatever business which we did, we technically did that business only in about 4 months. Because the other 8 months we were sitting idle because either the sellers or whatever it is for that matter was not confident to sign a term sheet on a Zoom call. But that's, I think, over a period of time, I believe we can continue, keep changing that and bring a huge customer behavior altogether as such. But that's how the entire experience has been. We disbursed close to about 3.5 crores right now on a month-on-month basis as rents to investors, growing strength to strength. We have about 1,200 investors. Our first asset, which took us 72 days to fund, we now are able to fund assets in days at max, for that matter, irrespective of size of the asset. Right? So clearly demand is substantially very high and so is the supply. We are just a technology platform which is ideally managing it on their behalf and giving them an entire great investment experience. But more importantly, we're matching the demand supply gap which is there in the market for people to do it. One very important point to your previous question, and I just thought I'll just add another point is people have a lot of money, right? Liquidity is at all-time high for that matter. Most of them have made good amount of money in the stock market, especially the ones who invested in, from April 2020 to about September 2020. They're all sitting on 200, 300% in terms of their portfolio. I'm hopeful, unless they've been trading very actively. But having said that, question then comes, okay, now I need to book my profits. Where do I deploy, right? Which is where I think the maximum money people would look at deploying, because debt yields are absolutely at all-time low. It's absolutely of no relevance to investors. That's when people are looking at real assets, chasing yields, and we are seeing tremendous amount of interest from investors wanting to participate more and more. Hence gives us more confidence to look at larger assets where we're looking at 50. Now we are able to look at even 150, 200 crore kind of assets and able to absorb them in less than 1.5 months or so. So that's pretty much been our experience.
Brilliant, Sudarshan. A slightly new concept for many of us. We got the number 470 crore, 1,200 investors, so mota 40 lakh rupees per investor, and this is the fractional ownership, like each asset is owned by multiple people, and you are giving the sort of fixed returns on that.
So Sunil, if you see, it's nothing but just a AIF, right? I mean, we have democratized a private equity fund where we are telling investors, you choose the asset you want to invest rather than relying on a fund manager to do it. But then, as much as we realize it's a whole retail problem, trust me, it's a even wholesale problem. Larger family offices with even 40, 50 crores of checks don't get accessibilities to such opportunities, don't know how to manage it, don't have the expertise altogether, right? So now we are working towards meeting that demand problem as well, and building structures where they are confident and convinced to keep deploying. So if you're at 450, we're very confident the next 2 years we'll be at 4,000, right? So it's all about building the right pipeline, right kind of developer partnerships, which allows us to keep building the business collectively altogether.
Sudarshan. And with a surname like that, you can never go wrong in real estate. I'm just kidding. Just changing gears, getting Vikram in, and Vikram sort of, while introduced to you as a digital marketing guru, easily, I want you to take a step back and with your super vantage points of having guided developers over the last 15 years, can you just sort of talk to us about industry, what some innovative practices in digital marketing, in CRM, etc. Now that I see the Sell.do there as well. Can you just sort of help us out with that?
Thank you so much, Sunil, for that question, and hello everyone, all the panelists. Primarily, what happened is pandemic caught real estate industry off guard, right? So basically, everyone the demand supply gap was already there, and digital was just picking up and getting primed, and suddenly everything had to go digital. So there were no CRMs in place, the processes were not very set. Uh, so some of them adopted digital wholeheartedly, while some of them took the easy route of distribution. So you see, basically, there are two type of technologies that came up. One is how to get onto distribution platforms, right? How to get my brokers aggregated. The other one who wanted to put in the hard work, actually, and we've been working with a lot of clients for that, is in digital you can do a lot of experiments actually. If you run a full funnel experiment, at the top of the funnel, you want to start segregating your audience. You want to see how your different matrices are being tracked. What's your cost per site? Everybody does carpet bombing right now, which gets quite expensive at some point, because you end up chasing the same guy over and over again. And only people that make money is Google and Facebook otherwise, right? So I think setting up the analytics right, using marketing automation, I think Prasheen is doing some good experimentation there with marketing automation and all these. So those are the things which picked up. So kind of adopting experimentation and growth marketing framework has become crucial. Secondly, at top of the funnel, a lot of influencer marketing. So the important part is getting across your message at a cheaper cost and cutting through fast, right, at top of the funnel. So a lot of influencer marketing platforms have come up, which allow you to get a celebrity on board to get your message across. So your creative innovations have picked up there, where you can lower down your cost quite a bit from that standpoint. Secondly, marketing automation and AI plays a big part there. Primarily, if you want to personalize message for a particular audience, right, and kind of depending on what events a person is performing when he hits your website or your call center or your CRM data, you want to kind of give him a particular message. So creative, quickly applying. So you just saw the Cadbury ad, right? Because they did it at a real scale. In real estate, you can do it at least 5 to 6 ads, apply an engine to personalize the ads very fast and send it to a particular audience, so that the engagement is much better. And you can test your engagement matrices upfront. Right? CRMs are getting more and more important. Collaboration has picked up a lot actually between different parties. Everybody was forced to get online. So collaboration between customer and a developer, broker, customer, developer, Zoom calls and all these, and how to get across your sales with that, tracking the analytics. Those are some of the innovations which kind of did speed up. Because earlier all the negotiations and pitch happened with a coffee table book, right? Suddenly everything went online. You could start tracking things to understand what's happening with your customer, how deep is he into the funnel, is he responding, not responding, and an integrated platform is what everybody is adopting. So those are the few changes that have happened. And I think things will get interesting from here on as digital takes more and more predominance from.
Excellent, Vikram, a good sort of introduction to the art of digital marketing and all that you have been doing. Analytics and automation at the top of the funnel. You mentioned AI, the personalized message for audience with Shah Rukh Khan doing that Cadbury ad. That out of it. Need to do more and more innovations like that. I love the collaboration piece. Was forced to go online, so collaboration between customer, home buyer, CP, channel partner, developer increased, and the happy forced digitalization because of COVID has accelerated most of these trends. Looks like.
Yeah,
so that's a fantastic segue into our next topic on COVID and digitalization. Sort of, I'm just taking a cue from what you mentioned, Vikram, that. It's been almost 5 months after the second wave of COVID. So we changed lots of sales and processes as marketeers during the last 18 months. So I just wanted to talk about, because all HBR articles, they keep on talking about lasting changes versus changes which will go back and how we can differentiate between those. So are any of the changes that you made in your sales and marketing, are they going to last? Or will we go back to the 2019 practices? Sort of a snap poll question to you is that, is your sales team doing any Zoom-based virtual site visits now at all, which everyone was doing 6 months back? Just wanted to take a rough ground check, possibly Rajiv, Prashin, Vikram, and Kunal Sudarshan add obviously. Rajiv, you want to?
Yeah. Sunil, I think the Zoom calls are happening, but not to that extent what it used to be. It has reduced by 70-80% because the sites are open. And mostly what we see in our site are end users. So they are coming to the site. So it's still that, movie release that happens on Saturday and Sunday. So it's the footfall which gets on Saturday and Sunday to the site. And that's where we do the maximum sales. But one thing which has changed and which will remain for some time is the digital impact. So if last is a pre-pandemic customer is to come 3 to 4 times for a premium segment to close a deal, today he's coming maybe once or twice. So that has reduced. So your funnel has reduced in terms of for the sales team that to close the deal, you got only 1 time or 2 time interaction with the customer. So 70% of the project information and market study has been done by the customer through digital aspect, and he comes only for the final negotiation or just to check what he saw online is really there on site or not. So that has changed. So 70% of education is digital now, but still the customer comes to the site in many cases. Yeah, leave about NRIs and the investor segment, that is still going on digital, but very small percentage. The other part that I want to touch upon is that when we talk about innovation, what Vikram was talking about, influencer marketing. The second part, I will just touch upon the channel partner, because that's so critical for us as a distribution leg, that how to engage with the channel partners. So one of the innovation that I have started seeing, at least not, if not in India, outside India, is that people taking Clubhouse as a forum and discussing topics. And it's so good that people are choosing Clubhouse as a forum. The Clubhouse is always a part of real estate. All the projects have Clubhouse. So we can integrate that Clubhouse as a feature and start forums. I think that is something really great, because whether your prospects, your channel partners are the big stakeholders. Because today also in a project, 60 to 70% of sales are happening to channel partners. So that stakeholders, if you can congregate them and make a forum, then you are done. And what Vikram was talking about, influencer marketing, that is becoming very critical. For a project to talk about their amenities, their specification, the differentiator, that's a great way to start the conversation with the people.
Yeah, virtual site visits have reduced, and we had discussed this earlier as well, that it will help us in eliminating rather than buying or selecting. We were always we were never kidding ourselves that we are going to sell homes completely sort of online. So you are saying it is true that 3 to 4 visits becoming 1 to 2 is happening because they are eliminating at least some choices on that and doing more research in digital. And of course, Clubhouse as a sort of a forum is an innovative way, largely to implement the influencer piece for CPs. Super.
Correct.
Prashin, you want
I think,
keep on?
yeah, I think I would very much agree with Rajiv here, and want to probably add few things that COVID actually gave us a lot of opportunity to set up an infrastructure like never before. So a lot of companies have gone ahead and set up their digital infrastructure in a way where the experience, the so-called experience, what people really come to, especially with our brands, when it's high-end luxury, people want to see and touch and feel things, and then they want to buy. So from that standpoint, it gave us a lot of opportunity to set up digital offices, virtual site offices, infrastructure which catered to audiences to an extent where they can actually touch and feel the product, if not in real, but digital. And I don't think any company had gone ahead and made that infrastructure so strong. So what is happening at this point in time, that infrastructure is getting used parallelly, and that is helping those visits to kind of get down to say about 1 or 2 visits. One. Secondly, people today are also smart. They don't want to waste time. So we are at least seeing a lot of visits that are happening virtually, and we are utilizing this existing infrastructure, the entire digital backend that we have created, to ensure that the cost of acquisition overall is relatively much lesser. So that adds to, again, points what Vikram was mentioning, that how we are nurturing a particular lead and then driving that lead back to our infrastructure, which is already existent. And that by itself, combining with points mentioned with Rajiv, that's reducing the cycle. So if you have a very robust infrastructure, you're really eliminating the need of a consumer to kind of come to the site at least of the second, third, fourth visit, what he used to do earlier. Secondly, the cost of acquisition, like I earlier mentioned as well, with lead nurturing and ensuring that you are looking at a particular lead right to the very end and relate and touching him or her at the point where he really is looking for a particular house. So lead nurturing is helping us with that intelligence. It's helping us reach out to that audience again with respect to influencer marketing, etc. I do think that it's a very strong avenue in which people are getting influenced on the social in the social mediums, and I think it's a new way of kind of entertaining at the same point in time, creating a perception about a particular thing or a product, and that's really working in today's day and age. So yes, it's something that is working on, and we as marketers need to believe that that change is constantly going to happen, and we need to embrace that change and kind of move forward and how it's getting done.
Really, Prashant. And with all these new stuff like influencers and things coming up, marketers also deserve to have some fun. Yeah? We historically, in the last 20, 30 years, we have put hot air balloons up and we've experimented with media. So we need our share. Super. The point on digital infra was very well taken, because you would not have invested if you are back not to the wall during the COVID time. And that is sort of really helping us out. Now, Vikram, any points to add from your?
I've seen a couple of trends here, right? The bigger brands can get away with no technology because the brand's already there, and actually people are buying brands, right? So, but once you come one layer down, they are putting those developers are putting a lot more effort into tech. There are two types of tech that will come up. One is a huge push is on broker aggregation and tech around that, right? How do I build loyalty? How do I reach out faster? How do I change my offers fast? So almost a loyalty platform which is coming up, and collaborating with brokers, giving them more transparency and all. So that tech is actually staying, and you see a lot of companies. We are also launching a broker aggregation platform and all these things. So that's collaboration is here to stay no matter what, because that is convenience for everyone, right? So that's definitely is going to stay. Second part is the some percentages of Zoom visits and all these. Uh, so you're scheduling your tasks and all, because the consumer wants it. Actually, what I've seen is the consumer is already there. The industry kind of a little shy of adopting technology wholeheartedly, and because they're so used to that touch and feel model, right? But I think 30%, 40% first visit scheduling, giving the customer the convenience to understand the product virtually first and then scheduling a visit is still not over pandemic. The basic, some strains are still out there. People still don't want to go into large crowds, right? So primarily taking all this into consideration, I think 20-30% of technology will stay there. Non-brands will still adopt it, and because it's a do or die situation for them. Uh, as you said correctly earlier, there's a lot of consolidation going on. The trust in brands are there, and collaboration will grow very fast from here on, because that's the need of the hour, and that's gained a certain level of importance. So has CRM, because everybody is trying to improve service levels. Reason because now, so with so many launches coming up, right? You want to close your deal fast, get the agreements done. Otherwise, the next guy comes in and breaks the price. You're going to lose your whole pipeline, and your cost is going to shoot up. The speed is and efficiency is going to kind of force you to adopt technology and get things done. So even if the online thing doesn't happen at the site visit, post site visit, everything we've already seen it at a couple of clients at Amnora and all other. We are able to finish off 800 agreements in less than 2 months, right? So those kind of things, and to de-risk themselves, developers will adopt it wholeheartedly. Uh, Front end, getting up to site visits, it will be a mixed model is what I've seen. But the non-brands will do it more diligently than the brands.
Got it. Super. That's a bit of a nuanced observation, breaking the brands in a couple of places. So, Rajiv, you want to add to that?
Yeah, Sunil, that's the one bit on the chatbot. Today, if you see a lot of pre-sale work is being taken over, at least started taking over by chatbots. And that chatbots in the website are doing very well. At least in the first round of communication, sending the marketing collaterals, giving some details about the projects has been taken care by chatbots. I think that is something to look forward in terms of getting chatbots as a bigger piece of sales and marketing. So I think that automation is going to be very efficient, and also it will reduce the time cycle in terms of connecting with the customer. And if the customer is really hot lead, then it connects directly to your sales team. So that automation is definitely helping to the chatbot process.
Super, bunch of points. We have 10 minutes left in the main sort of discussion. So let's cover two more topics, and I'll drag in Kunal and Prasheen for the next one, or more on the product, which is the home itself. In the pandemic, did you bring about any change in the product itself? We're talking about layout of apartments and projects. How are the customers reacting to these? And will some of these changes survive post-pandemic? Kunal, you want to start off, and then Prasheen?
So, yeah. So some of the short-term changes that we did was, communicating about Zoom rooms and communicating a campaign of work near home for commercial offices. They were more short-term in nature. Why I call them short-term? Because I don't know whether they will survive after the pandemic is over. Once your kid starts going to school, what will be the utility of that Zoom room? I don't know if there is anything of that sort. Similarly, once travel restrictions also ease, you will want to go to your actual office rather than take a tertiary co-location office or a co-working office. So these are some of the short-term changes that we did. From a longer-term perspective, we did add some more business conference rooms in our projects. Okay, so that whoever, suppose on a weekend, if you don't feel like going to your office, you might as well use the business conference room in the building itself and use it. Some of the other product related changes that we did was focus more on hygiene factors of the maids and the servants. Okay, so that again was a very crucial feedback that we got post pandemic. These are some of the changes that I think will continue for the long term. And not just about product, I would say even from a payment schedule or a flexibility point of view also, I think all developers are being more and more flexible these days as far as pricing and payment schedules are concerned. They are being very, very accommodative in that sense. One thing is very clear among developers is that they have realized sales which is happening is the clear barometer, whether it is financing through loan or any form of short-term investor financing, is still eventually a debt. They have realized that money coming in from customer is paramount importance, and therefore they are giving more and more flexibility to the customer. Having said that, one thing that I would like to really caution is that I don't see over the longer term many developers many developers increasing prices very drastically, because almost all developers have taken benefit of reduced premiums from the government. They have paid a lot of these premiums on an upfront basis, so they will need cash flows. Their lenders also will push them to do more sales to secure their loans. So I think that is where the key aspect lies for future sales. To what extent each project or each developer increase their prices is up to each individual demand supply situation on a project to project or a developer to developer basis. But honestly, at a market level, I don't see prices forming up so high in the short term. These are some of the thoughts from a product and a pricing perspective in times to come.
Fantastic. Great. Prashant, you want to add to that, and then we'll move to the customer?
Yeah, I think what also happened was pandemic gave us a time to go ahead and stop and reset and think really with respect to how we can, fine tune the product. one thing is definitely, like Kunal mentioned, that there was a need for this work from home piece, or like adding business centers to amenities, etc. And I think that is something that we are seeing drastically, because we are seeing more in terms of additional space. Like we are seeing larger apartments kind of going out. It's been a trend for our brand and our business, but at least at this point in time, larger apartments, or people who are the target audience who was looking for a 1 bedroom is looking for a 1.5, or a guy who has been looking for a 2 has been looking for a 3 per se. And we have also seen sales of luxury villas have been increased, especially in pandemic. But I think that's one side of it. I think overall, we need what it also gave us time and opportunity to think is, at this point in time, while the changes with respect to pandemic was happening, there was another shift which was happening, that millennials, who you used to call, have kind of gone ahead and started looking at apartments in their own way. So traditionally, there were a certain type of product related things that you used to do, like there was the puja room, or there was like a certain set of amenities that you used to give. There was a certain amount of definite specs that were there in the apartment. Now, if you look at the millennials coming in along with the pandemic, we have seen that there's a good amount of change that has been desired by these millennials. So I wouldn't be surprised if a millennial probably is asking for like a bar counter compared to, say, probably a puja room at this point in time. Now that's going to be, that's a fact. And how efficient your amenities are going to be like. Today, does someone really need a community hall per se, or rather they would utilize that space into something else? um, Again, with respect to how product enhancements are happening, if you look at say, for example, how, like we used to say that cars and real estate are two things that have not been evolved over the period of time when it came to technology, like mobile phones, etc., have been evolved drastically. Now, can we look at those kind of changes with respect to how it's happening in cars today, but how technology has adopted? Now we are seeing some amount of home automation, but that's at a very superficial level that is happening in real estate. But there is a huge opportunity wherein each and every aspect of your house can have this form of tech, and can be tech enabled, and can be nowadays. So it's a huge paradigm shift that I feel is in the making, not superficially only with respect to IT and like doing your lights on and off per se, but a lot of enhancement with respect to tech and with respect to product related changes, keeping in mind not only the pandemic but also the millennials who are at this point in time at the forefront and are going to be your major decision maker over the next 10 to 15 years. So that is something to definitely be aware and to look forward to.
Fantastic, Prashin. Great points again. Larger.
Sorry to interrupt,
No,
Sunil.
please.
One long-term shift that I can, tell you and highlight very clearly is the role of some of these aggregators. Okay, like we have Xanadu, Guardians, Anerok. They have actually come up in a big way from selling inventory point of view. uh, what I'm trying to say here is that, if you compare real estate with aviation, there is Make My Trip. Okay, they are nothing but aggregators. Now, some of these agencies like Make My Trip, earlier there used to be travel agents doing bookings in aviation. Now, Make My Trip has been able to aggregate all of them. Similarly, these aggregators in real estate like Guardian, Xanadu, Anerok, so on and so forth, they have been able to get all sub brokers under them. Okay, so that's a big shift which we are seeing across the board. For a developer of our size, honestly, over the long term, unless you have a very big scale at a pan India level, it really doesn't make sense to have a large sales team of your own. Okay, second thing which I would like to highlight here is that some of these agencies like Make My Trip, Go IB, they go to airlines and they buy tickets in bulk. They have good pricing negotiation power. Okay, same is happening with these agencies. I mean, I've worked with Guardians as a fellow colleague also, and now I'm on the other side being a client negotiating launch strategies also. So limited point that I am trying to say here is that there are economies of scale for the developer. These companies have created many entrepreneurs within their setup. Okay, and they are a formidable force as far as pricing mechanism is concerned. So whether scale is different, maybe developer to developer strategy may be different, but these guys are making the market in times to come.
Correct. Agreed, Kunal. Completely agree with the concept and with one out of the three names at least. But on a sort of funny note, but actually we run out of time completely. And
just a point on the consumer side, one trend what Prasin was saying, just to add up to Prasin's talk, is that wellness as a theme in real estate is getting evolved. And that's a consumer insight that, if the project can showcase wellness as a bigger positioning, I think there is more adaptability now because of the lockdown, people staying inside the home, the kind of air ventilation, water purification, noise reduction. I think wellness is catching up as a big and huge positioning.
yeah, clearly agreed, Rajiv. Wellness, and I think lot of points. So the gaming room possibly replacing the puja room. I won't go with the bar possibly, but gaming room definitely for the millennials. So many points. Actually, Sudarshan, you got only one chance to speak. Do you want to just sort of close the whole discussion with? There's some points on customer experience and all which we could not cover, but anything more on the topics that we have been talking about?
I mean, I just have a couple of points. Right? I mean, real estate is also a financial product at the end of the day on the other side of things, right? As much as someone's for an end use, completely agree with all the points, what everybody had to bring on board. But organizing an unorganized space, at least what we are trying to do, typically assets from 20 crores to 500 crores, there are no buyers in a big way. It's the ultra HNI den, and ultra HNIs in India are very, very small segment from an audience standpoint, right? But so 20 crores and above, under 20 crores, there are enough and more HNIs were happy to buy. Bombay is full of them, and now Bangalore is full of them. And 500 crores and above, you have all the kind of funds were there, right? So this white space, which is a very, very large, in my opinion, probably more than 50% of the entire market, is this asset ticket size, which is not there, right? So bringing about that as a financial product rather than an real estate product, which ideally means we are making it very transactional and not emotional, is a huge change which we are seeing in people. Because earlier, at least I can speak with conviction right now, because many sellers today are very, very emotional about an asset, etc. I mean, at the end of the day, it's when it's CRE for that matter, it's purely commercial and it should be transactional and not emotional. So yeah, that's
super. Thanks. We are Indians. We will be emotional. So all the best for your hard-nosed commercial sale, but super concept. Great. Sapna, 4:42. We are 2 minutes over the. Do we have time for one or two questions in the last 3 minutes?
Yeah, we'll take one question that a lot of our audience have asked is, one is, what is the healthy mix of traditional and new age marketing techniques? What our speakers recommend? Let's start from Sunil. Let's start from you. What do you say? Your one line answer to that. What is the healthy mix of traditional and new age marketing techniques?
Yeah, and we're calling it, so since Hasme, I was going to deflect to someone else, but so offline to online would be 50-50 already and should become 30-70 in the next 2 years, 70 being digital.
Okay. Prashin, what is your view on that?
No, I think we're already about 70-30 at this point in time. And I think that's going to increase as and how it works out. But I think more importantly, the need of the hour should determine what your marketing approach should be. If it's a big bang launch, you need to go with offline, you have to kind of utilize outdoors and your prints. But at the same point in time, if there is a need for, ensuring tight sustenance marketing effects, then you have to be on digital. So I would keep it that kind of balance. I would not eliminate either one of them, but yes, definitely the skew is shifting towards digital as we speak.
Okay, so Darshan, as an outsider, what do you feel that the developer strategies should be?
Well, honestly, it's completely how things are. I mean, our panelists are a lot from a residential background, probably the only one from a commercial side, but I think commercial can be 100% online. As much as we are Indians, we are emotional. I can make it very transactional from this side of things because someone's not living in the office, although majority of the time they're spending there. But having said that, when it comes to investments, it's a very different thing altogether, right? So I feel 100% online is the future. We are 100% online. I hope everything else, what Prussians 70 becomes 90 over a period of time. But there's a lot of things which you can do online, which sometimes offline does not give you, whether it's the reach to your audience, whether you want to be expressive, imaginative, show your real character. Sometimes the reach does not happen the way you expect. in the offline world, because it's very difficult to get everyone's attention. Like Facebook, Instagram is looking for a 5-second attention span from you, and beyond 5 seconds, you're already a premium customer for them, right? So same way in offline world, this is what is happening. So in online, you need to be as reimagine your entire strategy to ensure that that 70% which Russian already has becomes 90-95%. I'm hopeful.
Okay. Rajiv, what's your recommended healthy mix?
So if you talk about cost, I think it will be 60-40. But in terms of leads, it will be 80-20. So in favor of digital, because the digital cost is less. So obviously it's 40% is offline cost, but in terms of leads, 80% is digital.
Okay. Kunal, your view on that?
I would say it is project to project, customer to customer. If it is affordable, I don't think digital will have much role to play. You need wide reach. It's more of a distribution business in affordable, so more offline. But having said that, if it is very premium niche, obviously digital will give much more better results. So case to case, project to project, agency to agency, it would differ. I mean, there's no one standard fits all.
Right. Vikram, as a specialist, what's your view on that?
Let me first say this is music to my ears, right? Going from a 5-10% fighting with Prasheen for that 10% budget to kind of he's already at a 70-75. So what I've seen as a mix is, right, I would divide it between two. If you are in Bombay, Delhi, where outdoor is very expensive, 75 and 25. If you are in city like a Pune, Chennai, where outdoor is still in control, I would say 60-40, where digital will be 60. Because outdoor still gives you that shelf life and the larger than life picture. So I would say, depending on where you are, the split will depend on that.
Okay,
so the two interesting trends. One is the newspaper is dying. None of my my kid or anyone reads that. Second is when the kids are in the car, they are on their phone. So hoarding and newspaper are going to die. So they're just
right. So I think OTT platforms are now the new, the platforms. Probably we will be seeing a lot of ads happening. Again, what our panelists here are saying is there is no right fit or a perfect fit. It all case to case, region to region, location to location. Projects matter, whether it is affordable, whether it is a premium project. The stage of the project matters, and that decides what the healthy mix should be for a marketer. So that was a very enlightening panel discussion, we should say, and a very interesting conversation that we had on how sales and marketing are going to change, are changing, and what the future looks like. So thank you very much to all our speakers. This is Sunil Mishra for sharing those questions with our speakers and bringing the best out of them. Prashin for joining for the session. Rajiv Dash, pleasure to have you here with us. Kunal Cheda and Vikram, great to have to hear your views, and Sudarshan for bringing that aspect of commercial real estate into this discussion. So thank you all very much for being here with us. And this was the final panel discussion of our conclave. But we have a very interesting segment coming up where we bring to you an informal conversation between two of the veterans of the Indian Realty, talking about buoyant investment climate, Indian real estate attracting global investors. So while we say goodbye to this panel members,